Hey guys, Tommy Bryson here, and for the very first time, because of something like this, the market has gone down a lot. So right now might actually be the perfect time to start investing, but what I want to make sure you guys don't do is make mistakes that can be avoided. So in this video right here, I'm going to give you guys 3 ways to actually avoid these mistakes and to actually make sure it doesn't happen to you. And on top of that, towards the end of the video, I'll even give you guys a bonus too. But before I even get started, guys, I do want to say one thing as a disclaimer here. And it's not that I'm not a financial advisor. It's not this, not that, because again, I am an accountant. But the point is, all the information I'm going to give you guys here is not mine. It comes from Warren Buffett, the billionaire investor, and also John C. Bogle, the guy that created the first index fund. So all the information belongs to these great men that kind of had the most impact when it comes to how people invest today. So all the information here comes from people that make and made millions of dollars every single year from investing. Because right now I'm only 23 and I only have over 100K invested, but the point is that is nothing compared to billions with Warren Buffett and also millions with John C. Bogle. Because again, they taught me everything, and I'm going to tell you guys exactly what they taught me and how to avoid those mistakes. But later on this week, I will be posting videos, for example, on how much money I'm investing and what I'm investing into. So if you want to follow up with that, make sure you guys subscribe to the channel and hit the bell so you're notified, because again, I also do post videos every single day on YouTube. And also like this video, and that way YouTube shows it to a lot more people that need this information before they go out there and try to invest because of this entire issue that is going on right now. So for example, guys, the main idea when it comes to the market is that it's not complicated at all. The idea is that you want to buy low and sell high, you make a profit and you call it a day. However, people that want to make money from you, either by buying a course or having you hire them to be a financial advisor, they want to charge you money and they want to complicate things for the sake of them making money, and you thinking that you're not smart enough to actually do everything yourself. So the main idea is this, okay guys, when it comes to investing, you want to buy low and then sell high. But then it gets complex when human emotion gets into play, and then prices for an investment keep going up and up and up, and you buy very high, and then boom, you're like, wait, I thought this was the price, I was gonna sell it later on. But the answer is, well, now the company went from like this to this, for example, Tesla, and you're like, okay, now I have to sell but I just lost my money. What's gonna happen now? The answer is, well, you bought at the wrong time. You bought way too high. So how exactly do you know when to buy? The answer is, when it comes to investing, there is no predicting in play. It's a game of math and it's a game of analysis. So for example, say for example, Apple right now is worth $100 and you buy it and you're like, okay, I just bought Apple at $100, but in reality, the real value of Apple per share is $125. Well, that means you don't even know it yet, but you just made $25 because you know for a fact that Apple is actually undervalued. However, the same applies when you buy a company for $100, but in reality is worth $75. So how exactly do you understand exactly, well, how do I know when I'm buying at an undervalued price or a higher price? The answer is, well, you don't need to guess, because all the answers are in the financial statements to these companies, and you can analyze those documents to find out exactly the price per share of that investment. However, you probably don't know how to do that, and that is fine. But if you want to learn how to pick stocks, you want to read The Intelligent Investor by Benjamin Graham, and this way you learn exactly how to get everything done. And that's how you do it. There is no predicting in play. It's not really that complicated. The answer is, can you read financial statements? And if you can't, yes, you can learn though, okay? Now, the second thing is this, guys. Second mistake people make out there is they try to pick stocks. Now, Tommy, you said picking stocks is pretty good. The answer is, it's good when you know what you're doing. But the average person does not know what they're doing. So the best thing they probably do is just invest into index funds. For example, people say all the time, well, if I buy, for example, Apple, everything is fine. I bought the company, I'm good to go, it's solid, and everything is gonna be fine, okay? But in reality, what people don't know is that the worst thing that can happen to a company is not losing 10% or 5% or even 30%, but the worst thing is that the company goes out of business and you didn't sell on time, and now you just lost all of your money. And over the past 50 years, This has happened over and over again to several people that thought they were investing into solid companies, but in reality, those companies went out of business. So what you want to do is this. If you don't want to pick stocks, which is very hard, very complex, and I don't even do that myself anymore, what you want to do is invest into index funds. How do you do this? Well, the answer is don't learn from me, learn from John C. Bogle, the guy that invented the original index fund for the first time ever, okay? So if you read that book, it's called A Little Book About Investing. Here it is right here. Go read it. And by the way, so far I recommended 2 books. If you guys sign up for Audible, you also get 2 free books. And even if you cancel, you can still keep those books. Link down below when you sign up with my link. The idea is this, okay guys? You want to either pick stocks by learning how to do it, or you want to do index fund investing by learning exactly how it works, and that's what I currently do, okay? And that's why I invest, I get my returns every single year, and I do not take massive risk every single year. And now guys, the third mistake people actually make is going out there and investing all of their money into the stock market, because now they think like, hey, this is going on right now, so I know for sure I'm gonna dump all my money here, and when everything passes, I am going to make a ton of money. The answer is, well, I had a friend call me a few weeks ago and told me, Tommy, I want to invest money now because again, the market is down, and I'm even gonna borrow money and get a loan and invest that money also. And I was like, are you crazy? Have you ever invested in your life? No. What are you gonna invest into? I don't know. Well, why would you do that in the first place? The answer is this, okay guys? When it comes to investing, you never want to put all your eggs in one basket. So even if the market is down 10%, 20%, we don't know how far this pit actually goes, okay? So you don't want to invest all your eggs into one basket, especially if you are investing for the long term and you might need that money later on or very soon if you do lose your job. So the answer is, what you want to do is you want to invest over time. So I made several videos in the past saying, for example, the perfect number is 10 to 20% every single time you get paid, and you put that money either into the market and some on the side, and that way you have 2 things going on for you, okay? You can invest 10 to 20% and you still have 80% of all your money to cover your bills and whatever you want to do, and that way you're good to go. But on top of that, you also have extra money lying around from that 10 to 20%, and you can put that money, for example, into other investments, for example, real estate, or even starting your own very own business. And that is the point. You want to invest over time, not invest like you know, because you don't know how far the pit is going to go. So that's why I make it a rule to invest every single month $500 until I turn 60 years old, and then boom, I call it a day. Now, the only time I actually invest more money is, for example, during this time, but I invest again. If I put in, for example, $10,000, I know I'm putting in money for this year and next year. If I put in more money, I'm putting in money for that year, the next year after that. If I put in even more money, I'm putting more and more money. But I know for sure this money is supposed to be invested over time, and that is how I do it. And I don't invest money that I will need in a few months or in a few days or in a few weeks, and that's why I invest 10 to 20% of my income, and I don't invest 50%, 60%, because that becomes very risky at that point. Now, number 4 is this, guys. People do not know when to cut their losses. And the main thing is this. You might think, for example, well, I'm going to buy Tesla. I'm going to buy an airline share. I'm going to buy this and this right now because, again, the industry is constricted. It's going to go down, but again, it will bounce back up. You don't know that, okay? It might not. Again, the worst that can happen is the industry goes all the way to zero and you lose all your money. The idea is, if you want to pick stocks, learn how to do it. I taught you how to do it already. Read that book, okay? But how do you know when to cut losses? Well, number 1 is this, guys. Professionals are traders. Traders are people that trade investments every single day within 1 year, and they keep trading back and forth and trying to make money. And everyone on YouTube says like, hey, it's the best way to make money. But in reality, there's statistics out there that show that 80% of all traders lose money every single year. So again, those people do not know when to cut their losses and when to cut their profits. And people get greedy because, again, emotion plays into effect. So the answer is, what you want to do is have rules in place to make sure you don't go beyond or over or under. So for example, my rule was this: whenever I was investing into individual stocks around 4 years ago, what I would do was I would always say, for example, well, if I lose below 10% of my money, I'll cut it off right there, I'll sell it, and I'll take that loss. However, if I make a little bit over 15% of my money, I will take that win and then I will sell it and I will keep those profits. The idea was that I would keep trading back and forth every single year. I would make some money, I might lose some, but overall it would average out because, again, I knew what I was doing. But I made money, yes, but at one point I got greedy and I lost money on one investment because, again, I didn't sell it when it got below 10% because I said, well, it might go up. Well, it might keep going up. But in reality, the worst that can happen, it goes to zero, and that stock right now is literally negative 90%. And that's what you want to do. You want to not get greedy. You want to sell based on your rules. And yes, I made all my money back, but the answer is, if I cut that out when I said I was supposed to cut it out, that would have never happened to me. Never use emotion to invest. Always use logic, math, and the financial statements, and that way you are good to go. And now, guys, the very last one, number 5, and so far I said, like, hey, I'm gonna give you 3, but so far I've given you 4, and now this is 5. It's a bonus one because I want to make sure you guys don't make any mistakes that can be avoided. So if I have the answer, why wouldn't I give it to you guys right now? So number 5 is you want to understand the problem with math and logic and also research, and not just based on what people and the news are saying out there. So for example, guys, okay, there are 7.8 billion people in the world, and if this goes worse to worse, okay, and it ends up, doing that thing to people, well, 2% of people will go. And basically my question to you is this, guys: do you think that if 2% of people go, do you think the economy can still continue on normally? The answer is probably going to be yes. Although it is tragic, the answer is yes. People can still go on. They'll probably learn more from the situation. But the point is, the economy will continue. So for everyone out there that is selling their retirement accounts and thinking that, hey, the world is over, this is going on, oh my gosh, I'm done, I'm selling everything, the answer is that is not necessary. Just look at the math, look at the research, and it'll show you that, well, basically right now, people are probably overreacting a little bit, but it might be the perfect time to actually invest more money because of it, okay? Because again, the market plays a huge part when it comes to human emotion, and you want to take advantage of it during these times also, although it is unfortunate. And guys, that is basically it. Comment down below and let me know which one of these 5 were you about to actually do. Comment down below, let me know. And as always, if you guys enjoyed this video right here, well, like this video, and on top of that, also subscribe to the channel and hit the bell so you're notified. So I post a video every single day, you guys are notified whenever I post that video. And on top of that, if you want to watch a video, for example, on how I invest my money, watch this video right here. And also click my face right here to also subscribe to the channel now. And I'll see you guys tomorrow. But before I do, make sure you guys follow me on Instagram and Ty Bryson. And thanks for watching. And as always, peace.